The wealthy will always buy and hold assets rather than hold a job, no matter what it pays. That's what separates the wealthy from us. They understand it's a results-based income, not a salary, that will build your wealth and will make you financially free. So if this is the case, what are the best assets that you can buy and hold to build your own wealth? Well, the first one is probably the easiest one to start. In fact, you can start it today, and that's investing on an ETF on the stock market or an electronically traded fund. These are baskets of the best stocks on the stock market that you buy and hold as they grow in value over time. Companies like BlackRock and Vanguard will handpick hundreds of these stocks and put them in a fund that you can invest in. And if any of these stocks fall in value over time, the investment company will swap them out for better performing stocks, therefore maintaining the value of the ETF. And over time, these ETFs have returned an average of 9% or often higher. Now, one of the greatest benefits of holding ETFs is the instant diversification you get. Holding so many stocks ensures you are invested in a wide range of markets. Another great benefit of holding ETFs is a fund is managed for you and you are charged at a far reduced rate than if a fund manager was looking after it for you. For me, the greatest value is the set and forget strategy of the ETF. I don't need to check a balance sheet of all the individual stocks. The ETF does it for me. I simply invest my set amount each month and carry on with my life. To me, investing in my ETF, in my mind, is just another expense to pay for on payday. And you can take this to the next level by investing more than one ETF, so you've got a broad spectrum of all the markets. That's the ultimate diversification. And in massive downturn markets like we're experiencing right now, it could be a best bet against risk. I invest in 3 ETFs for my long-term plan. One is tech heavy, the other 2 are more broad-based. I simply don't have to think about it. My portfolio is growing in the background, but I get to focus my time on other things I love to do, like building my investment property portfolio. Now, this is an asset class we invest a lot of time into. One, because I love dealing with properties and doing the renovations, but also we can make big returns in a short space of time. Now, working with real estate is not everybody's cup of tea. It can be stressful and long hours. The nature of real estate, you're dealing with a lot of stakeholders, from bankers to contractors, from suppliers to investors. There can be a lot of unknowns and surprises, and not all of them are nice. But it's also a journey full of energy, learning curves, making new friends, and becoming more experienced. There is very little passiveness in dealing with real estate and building a portfolio. Quite often, I'll find I'm the bridge between moving parts. But quite honestly, it's a role I love, and I love learning everything I can about real estate investing. Essentially, you're identifying and acquiring a piece of real estate and doing forced appreciation with renovations or construction. The goal for me is to have the bank value the property higher than what I purchased for and the renovations. In fact, almost every time our exit strategy usually involves a bit of tax-free cash in our pocket. This is commonly referred to as the BRRRR method: buy, renovate, rehab, refinance, and repeat. If done properly, the refinancing of the property gets back your original investment and your renovation costs. Your tenants are paying down the mortgage and your expenses. And the best thing for me is in years to come, as the value of the property rises, you can refinance it again. Now, have enough properties, you can fund a lifestyle for as long as you want. And the cherry on top, because the refinancing comes from debt from a mortgage, the cash is tax-free. It's a tax-free income, just how the wealthy people do it. And as we continue building the portfolio, we can leverage the value of the current properties to acquire new ones. Now, an example of this, if we purchase a property for $300,000 and get a mortgage for 75% of the value, we have $75,000 equity in the property. Now, assuming that property grows in value about 5% a year, in 10 years you'll have over $225,000 in equity. On top of that, your tenants have paid down your mortgage 10 years, providing you with more equity that you can draw on. When you multiply this by a few properties, you can see why most wealthy people invest in real estate. And by using creative financing and leveraging our high earning skills, we can really accelerate the time it takes to acquire these properties. In most cases, we don't even use our own funds. By focusing on grow markets where job growth has outstripped rental demand, we have pushed our net worth even higher. Today we own properties in multiple provinces in Canada, and eventually we'll go international, like many people in our network. Now, like any asset class, there's always risks. There can be a recession, there can even be a market crash. Your investment property can be damaged or even destroyed. The rules around renting can change. You can even get undesirable tenants. But these risks can be mitigated and managed in many ways. There will always be risk, but risk is a fundamental part of growing wealth. If there was no risk, everybody would be doing it. Now, one thing to remember is property as an asset class has been around for hundreds of years in the modern world. Some asset classes are brand new, like AI and quantum computing stocks. As an emerging asset class, investing in AI and quantum stocks has huge potential, but also has extreme volatility. It represents the new frontier in robotics, software, and applications in all aspects of modern living. Investing in AI and quantum stock have explosive growth potential, as they are at the forefront of technological innovation and revenue increases. Investing early in some of these stocks can realize huge, life-changing returns. We have seen examples of this in the AI market, as AI adoption rapidly increases across all markets from cybersecurity to retail companies. The demand for faster processing and data analysis has driven this. Government bodies and institutions have invested heavily into companies like Palantir, the new darling of Wall Street. And quantum computing is just getting started. Its potential is just off the drawing board and in its early stages. The promise of quantum computing is being touted even bigger than AI and being chased after by all the large tech companies. Investing in these volatile stocks can be exhausting, with huge price swings and hype cycles. Realized returns can be years away, while the commercial application of its promise can be made profitable. There's also a risk of a market bubble, similar to the dot-com crash in the early 2000s. There's also data privacy and AI ethical usage that's being debated in all levels of government. Indeed, the risks are as plentiful as the promise, and as a new asset class, it's easy to get carried away with all the excitement and the speculation. For some, investing in an ETF that focuses on this emerging market, like ticker AIQ, is enough to provide some exposure and minimize the risk. And if you're feeling a little bolder, you can invest in established tech giants like Palantir and Nvidia. They often invest in these tech startups for the chance of getting a 10x return or even a 100x return. You could even do that yourself. Invest a small amount into a few that show promise, like Palantir did just a few months ago. Now, this is highly speculative and you can lose all your money, but with high risk can come high reward. Now, perhaps something not as risky as that, but something that I would expect to take a lot of work, is starting your own business. Speaking from experience, it could be a life changer, provide you with a lot of benefits, and give you a solid way of building wealth for you and your family. And a successful business can even be passed down to the next generation. Successful family businesses are often passed down as a growing asset, developing the brand to new heights and greater success. Scalability is a huge benefit of a successful business, and often it comes with greater cash flow. We've all heard of businesses started in the shed and eventually sold to big corporations for millions of dollars, such as tax deductions, consistent income that can be used for growth, and security for the whole family. But before you become the next Jeff Bezos, your business has multiple benefits. And as a contractor, I love my renovation business, and I've scaled it over 15 years. I've also diversified by renovating my rental properties and my flip projects. If you have a passion or a skill base you enjoy, capitalize on it by starting a business. Identify a problem that people have in that field and give them a solution. You can start a cash-generating business like an e-commerce store. The internet connects you to 2/3 of the world's population. It's easier now more than ever to start a business online and scale it. You can invest in a franchise, a proven business model that you can take to the next level. You can start a service-based business in your local community, solving a need in this ever-busy world we all live in. Your business could be started with just a few dollars, but in a few short years could be turning over millions. Now, I know this to be true because I did exactly that. As an immigrant coming to Canada with no money in the bank and no skills, just a passion to learn. I now have multiple income streams, all focused around building wealth for the family. But starting my business all those years ago, when I was just looking to make $100 a week, was the first step. I would always recommend you start your own business and take control of your destiny. Nobody will look after you and your family better than you. It taught me so much about the value of hard work, finances, being grateful, and self-determination. So, 4 great assets to get into in 2025 to build long-term growth and wealth. I personally hold all 4 in varying degrees, with real estate investing my primary focus. But diversifying with the other 3 is important to my strategy. You see, in my mid-40s, I discovered that wealth isn't about quick wins. It's building appreciating assets over time. At some point, those investments will pay off, and you'll gain your financial independence. At that point, you can kick back and relax, or like me, work forever and enjoy the time. The important thing is, you'll have the choice to do exactly what you want, when you want. And if you're in your 40s and you're still not sure what to do, watch this video right here. I was in my mid-40s when I realised I had no pension, no savings, and no investments. It was a really scary revelation. But you know what? I got through it, and so will you. I'll see you there.